All right, we'll start with the topic, the rapid mortgage reduction. Justin will cover that, and we'll talk about the property side of things after. So a little bit brief introduction on me. As some of you guys have seen me from either my association with NIDUS Group in property transactions. I could see some of our landlords are there as well, and also a few people who bought and sold through us. So my name is Khurram Shahzad, formally speaking, and what a lot of the times you can see on the screen my credentials. I've worked in the few different companies in tech and also in finance. Also, I've worked in a lot of customer service jobs as well during my graduation. Now, property journey started 15 years ago. So that is also, I'll share those as well. A lot of the times people ask me, what do I do day to day? My day to day is 95% involved in selling other people's houses. So I service a lot of my buyers and sellers on a day to day basis. Also, I do it myself. I still go to the open homes, show the buyers through the houses, and also go people meet and list their properties as well. So majority of my time is involved in that, and anything other than that, I'm involved with Charlene's team. Charlene's here as well. She's head of our property management department. Also, I work with Aman's team. Aman is our head of H2O loans. So the majority of my time is spent within the deal infrastructure. So buying, selling, renting, finance. So the whole day I'm involved in that day to day. So just covering that initial bit. My journey, as I mentioned to you, started in real estate with $15,000 in savings. Me and my wife, who bought our first apartment in West Ryde for $392,000 back in 2008, when interest rates actually after the GFC went up in 10 or some part 11% as well. So that was August of 2008. I bought that apartment I wasn't in real estate, by the way. I was working for KPMG in finance at the time. So we bought that unit against the wishes of most of our friends and family and people who had a lot of influence on us. So, but long story short, since then, we've built ourselves a portfolio of $15 million plus properties. They're all some units, houses, each category you can think of, and I own a property like that as well. Some properties over the years I've sold and upgraded to a better asset class as well. So this particular unit, I've sold it and bought a commercial property after that, where we run our office from in Rudy Hill. And then there was another apartment which I sold and bought a property in Blacktown, where we own a second office in as well. And buying properties on super, personal money, everything, all of the above. Now, purpose of this group is basically why there was a need to have this webinar or create a group of people is what I was looking at in my day-to-day interactions with a lot of people over the years. This is my 14th year in real estate. When I speak to a lot of people, they still lack the basic knowledge of finance and buying a property. So I started making those shorts, which you might have seen on the Instagram or TikTok or YouTube, and started sharing that knowledge. And then we wanted to make a two-way sort of interaction. A lot of people put the comments or questions through DM. So we wanted to make a platform where people can come in and join these sort of discussions and put the questions, and we can, have people in a community where more of like a educational platform. Because personally, what I believe is like investing in real estate has given me a lot of options which I wouldn't have it otherwise. And it has nothing to do if you work in real estate or you don't. I've seen people over the years, like in my time in real estate, I've observed thousands of transactions in real estate, people buying, selling, renting, financing, and all that sort of stuff. So what I've noticed, even people with the average income as well have a portfolio of like 6-7 properties, and they retire very comfortably and have a very sound and real money-backed, equity-backed backup plan. So if they lose their job, or if they want to start a business, or if they want to, explore different options in life, if you have surplus money does give you those options. So I'm definitely fully not there yet, and I'm still working day to day. And also most of my portfolio is leveraged. I'm not stopping here or anything like that. I still have young kids. So basically, but what I've seen is what I saw on the ground level, I wanted to share with people. So create that financial independence mindset and share the learnings, and also how to create that multi-generational wealth, or even to sort of leverage your money, have your actual equity growth in a passive income on a year basis, and giving you more options to do more things in life. If you want to take 6 months off work, you have some sort of income coming in. Those sort of flexibilities I'm talking about. So that is the community which we'll be sending you the link to, and it's a free to join. There's no cost or anything. You can ongoing basis. It will be monitored. We can share the learnings. We can share the experiences, and then maybe later down the track, once we have enough members or people have the appetite, we can look at a collective investment opportunities as well. Like we, including myself, we all put the money together and buy properties where, like, there's a lot of capital gains to be made and stuff. My phenomena, most of you who know me and who've interacted with me, like, I buy in the metro areas and I buy existing properties, and I profess on that as well. House and land packages are good if you're buying it on your super, or if you're buying it for like a long-term investment, like where you can get a lot of rebate for tax and depreciation as well. But they are good for developers and people who put the money in to develop those house and land packages. They make a lot of gains from them. And then the people who buy it, unless it's on a long-term 10-15 years plan, you don't make too much money from it in terms of the appreciation. It does take a lot of time, because the entire development process and also the handling of from buying a land to developing and then building, a lot of those costs passed on gets added on to the end consumer. So the people who want to be part of this group and part of this journey going forward, I would suggest, like, look at it different way, how to add value today, how to add value and upgrade that assets today, type of thing. So we'll talk more in detail, but in a nutshell, that's the community we're trying to build, where making money is not frowned upon. I understand there is a culture of tall poppy syndrome in Australia instead of America. In my experience with going to America and meeting with people there, and even the business people, they celebrate success. They celebrate how to get ahead in life, or how making more money is considered a good thing, instead of in our space in Australia. So in this group, I would encourage, like, we share our wins and we share our success. So those are a few fundamentals. As I said, like, we're all open to the discussion and all open to the sharing the knowledge as well. The 4 pillars of the community: progressive mindset, and the people who are looking at alternative income sources in terms of your equity growth or money coming in from your investments, and also actual assets, like building the actual real assets. So that's why the brand I put my socials is like real money, is like the real actual money. Like, I'm a big fan of investing in brick and mortar, gold and silver. So that is the real money. So, and that's what I've seen and researched and looked at people over the years, like they made, very big gains out of those. And also building multi-generational wealth. A lot of the times in my time in real estate, we deal with a lot of mums and dads, because I'm in residential real estate. And I see people in their 60s or late 50s, when their kids are late teens or coming to early 20s. They want to help them out, to set them up, buy property in Sydney or Melbourne or Brisbane, in the metro cities. But they themselves don't have enough equity, or they haven't many times paid off their houses. So they are unable to help their kids get started. In order to do that, obviously you need to have your own finances sorted, so then you can help your children. But on the other side, where people have paid off 2 or 3 houses, even with the similar income, but different strategies in like 10-20 years on how to save their money, how to invest their money, or where to invest their money, which will give the biggest return, and then paying down the house, upgrading to a better asset class in terms of the, like, instead of buying a unit or a townhouse to a house, or adding more value, getting more rent. So those people have that luxury of helping out the kids and setting them up for the, for their journey in life. So I thought we'll share those sort of things here. Now I'll be passing it on to Justin, who will be talking about from the mortgage reduction. Like a lot of these questions over the last 3 months were on like how do I pay off my mortgage quickly. So Justin, I will pass it on to you. Justin will be sharing his screen.
Hi, Crom, can you see me?
Yep.
Okay, just give me a second. Can you guys see it?
Yes, I can see it.
Okay, so yeah, hi guys, my name is Justin. I'm the mortgage broker from H2O Loans. I'm just going to speak with you today about some tips and strategies on how to pay off your home loan faster. So first strategy is using an offset account. So an offset account works like a transaction account or a savings account. You can get your salary paid into it. You can spend money from it directly. And what it does is it reduces the interest that you pay, allowing you to pay more towards your principal. So for example, your home loan is $500,000 owing and you leave $50,000 in your offset account, you now pay interest on $450,000 of your loan. So by using an offset account, you're charged less interest. So the loan gets paid down faster because you're paying more towards your principal. So you'll see in the image below on the left-hand side, client has no offset account linked to it. So they're paying full interest on the $500,000 of the loan. Whereas on the right-hand side, they have the offset account linked. They put $50,000 in the offset account, and they're paying interest on $450,000 worth of the home loan. The next slide is showing a St. George calculator. Basically the same example. $500,000 is the outstanding loan balance, and the client has put $50,000 in the offset account. It's just showing that if you leave that $50,000 in the account for the life of the loan, you could save up to around $225,000 on interest alone. Of course, this is just an example. Usually you would be, taking money in and out of that offset account over the life of the loan, but this could shave off up to 6 years of the loan term.
Justin, I have a question.
Yeah.
So this 50,000 need to be kept into the account for the entire month to be interest calculated on 450, for example?
Yeah, so it also depends on your repayment cycle as well. Let's say your payment cycle is monthly, then you need to keep it in there for the month. Okay. Next strategy is using a redraw facility. So offset account and redraw facility are almost exactly the same. They're very, very similar, just some minor differences to explain to you. So a redraw facility lets you access extra payments you've made on top of your home loan. So a redraw is not like a transaction account, but rather a facility attached to your home loan. So it doesn't give you that same flexibility to access your money in the same way that an offset account can, because an offset account works like a transaction account. So for example, if you're using a redraw facility, let's say your minimum monthly repayments on your home loan is $1,000 and you decide to pay an extra $100 per month, that adds up to about $1,200 in a year. So this extra $1,200 that you've made extra payments onto your home loan, you can redraw that at a later date and use it for whatever. And this image, it shows the differences between the offset and the redraw. So the key difference is you see on the left side that the offset account is a separate account that is linked towards the home loan, and they have left that savings in there, $50,000 in the offset account, and then reduces the interest that they pay. Whereas on the right-hand side, you see that the redraw facility is attached to the home loan, and that is paid on top of the home loan, and it still reduces the interest. The next strategy is changing your repayment cycle to weekly or fortnightly. So let's say your minimum monthly repayments per month is $2,000 principal and interest. That means you end up paying 12 repayments in a year, which will equal to $24,000 in total. Whereas if you decide to change it to fortnightly, so your payments would be $1,000 minimum principal and interest per fortnight, you would end up making 26 repayments in a year, amounting to $26,000. So by paying fortnightly, you'll end up making one extra repayment in that year, whereas compared to doing monthly repayments. And because the interest on your loan is calculated daily, making repayments on a weekly or fortnightly basis will help reduce the interest that you pay over the life of the loan, and you pay more towards your principal, helping you become debt-free sooner. And last but not least, consider refinancing. So if you look at your home loan, you think that you're not getting the most competitive rate, or you decide that you want to find ways to pay it off faster, consider speaking to your bank or your mortgage broker about your options. Because usually when most homeowners purchase a property, they usually set and forget their home loan. So they won't really do any research after that on which bank is offering the new best rate, or which bank's offering a cashback or overall better deal that they can get. So it's best to speak to your bank or broker to get a health check on your home loan and look at options of getting a low interest rate or setting up the structure of your home loan in a way that will allow you to pay it off faster. So just a bit of background as well on myself and H2O Loans. So we work with about 50 different lenders in our portfolio. So if you have any questions about, your home loan and ways to pay it off faster, or you want to consider options of refinancing, these are my details and you can have a chat with me after. Thank you.
Does anyone have questions for Justin, please? Let me know and then I'll enable your mic. You can put it in the Q&A if you have a question. Like you can put a hand up there and then I'll enable your mic if you on some of the strategies which Justin discussed. Anyone? There's a few more people have come in. Okay. Dr. Wafa, would you like me to enable your mic? 1 second. You can ask Justin directly. Okay, Justin, you have a question coming up. I'll read it for you. How easy is refinancing?
Easy is refinancing. Well, refinancing is basically just a matter of switching your home loan from one bank to another. Application process could take anywhere between 1 to 2 weeks, case by case, depending on how many home loans you have, things like that. But it's as simple as any other application, really.
I think the second question was, please explain redraw and offset in details.
So what exactly did they want to know about redraw and offset?
Dr. Wafa, would you like to ask exactly?
Guys, I just wanted to ask about the refinancing. I mean, when you like go for a different lender, for example, so how easy it is, like whether, are they really gonna reduce the rate compared to the other party, or
Yeah, that
really
is.
worth it or what?
Sorry, what was that? The last part?
Is it worth doing that, or it doesn't make any difference if you do all the hassle of refinancing?
The point of refinancing is for you to get a better deal. So if, for example, you've spoken to your broker, spoken to multiple banks, and you found out that you're actually getting the best deal, then there's no point in refinancing. But if you speak to a broker and they can show you that another bank is offering you a lower interest rate plus cash back, maybe less fees as well, then of course it's worth refinancing because you'll save money, if that answers your question.
So maybe if I can summarize that, like look at your current rate and then see, with different banks, if you can negotiate to a better or lower rate. Will that be right?
Yeah, they can do that as well.
I have a question from Julia. She's asking how redraw and offset, what's the difference between them?
So the main difference between offset and redraw is convenience. So an offset account, like I mentioned, it works like a transaction account. So you can get your salary paid into it, keep your savings in it, and you can spend money from it directly. So it's basically is a transaction account. But with a redraw, if you want to spend the money that you put into it, it's just a matter of transferring the money from the redraw to a transaction account and then spending it. So it's really just a matter of convenience.
Okay. Any more questions, guys, for Justin? Okay. If not, we'll continue with the rest of the presentation. I'm very mindful of the time. Okay. I'll share my screen again. Okay. Can you guys see it, Justin? Okay. All right. As I mentioned to you to start with a lot of our interaction with the people on average weekly earnings and then creating wealth through property. This is a bit of a snapshot on the statistics with in different industries, how much people make in a week. I'm not going to spend too much time on this. As you can see it on an average, wage is anywhere around 2,500 to 3,000. That's average we're talking about, gross salary. And now this is the median values in all capital cities Australia-wide. You'll see in the next couple of slides some of the reasons why they've gone up as well, except Melbourne. And here in this slide, you will see last year, everyone was talking about property values going down and it's going to be a bloodbath and everything. Sydney grew by 11.1% and Perth went up by 15.2%. In the slide where I showed you the wages here for the mining sector, going highest there, I believe that has an impact on the prices in Perth as well, and lack of houses as well in Perth. And a lot of people have gone there, and then there's lack of properties to rent even at the moment. But in my personal opinion, I'll be sharing the top 20 suburbs as well via email. You'll get an email link tomorrow. My pick of top 20 suburbs Australia-wide to invest in, and that does not include Perth because it's bit of touch and go market. It's not 100% proven. When we look at investing, we look at last 20 to 30 years data. And in that, the Perth property market has fluctuated a few times up and down. So that's the change in dwelling value in throughout Australia. There's this information, by the way, some of it might be basic for some people, but I'm catering our target audience for this is people who are just starting to invest or get into the market to start with. If some of the information is basic and you'd like to know more about some of the details, we can have a chat offline as well. Now, this is the calendar year growth of rent versus the value of the last 10 years. So a lot of the time people, when we speak to people when they want to invest, they say like in the country towns or in the regional centers, the rents are going higher. This is countrywide stats, by the way. So the information is from CoreLogic. So capital growth have outperformed the rental growth. And last year, first time in the last 10 years, where the rents have gone up hand in hand with the capital growth. Because we had the dip of capital growth in 2022, so that's why that's a good bounce back there. And with the rental growth as well, a lot of the people pretty much have priced out in most of the suburbs they were living in where they were renting. And I guess like everyone knows the story like that around their family, friends, or someone they know. This is why buying a property in the long run has a better investment. So, and that's where the graph is like the weekly rental values surging up as well. Now, a lot of the time people ask in this slide, you will see like so I just want to share the background story as well with you. A lot of the time people ask like, okay, how many people invest in Australia? So the stats in Australia is out of 11 million taxpayers, approximately around 2 million people have an investment property. Out of those 2 million people, 71% people have one investment property. And that stats falls to a very low level when they look at 2 or more investment properties. And that drops down to 18 and 5%. And if you look at the total number of investors year on year in the last 10 years, that's dropping as well. And that has something to do with the rental increases as well, where not a lot of people are seeing like the value in terms of renting the properties out. And that's why the rents are being pushed up. And that has something to do with the supply as well, I guess, like few of you guys will know that. So now when you look at the stats of like 4 or more investment properties, that's only 2% of the 2 million. I found that very interesting. I thought I'll share that with you as well. Now, this is where the new construction approvals versus population at the moment. And these are the very current stats as well. Now, this is where when we're asked the questions on where the property market is going, and I keep on telling my clients and everyone I know, even friends and family as well, the Australian property market is very solid, depending on where you're buying and how good your research is before buying, looking at the demographics, looking at all the surrounding stats, because you make money when you buy a property, not when you sell. So the current stats show us like there is still a gap between the population growth and the dwellings completion. And the dwellings completion have fallen down after COVID, like to a record low. And the cost of construction now is pretty much has something to do with the property market is holding it up and the values aren't dropping. So, and that's the chart where you can see population trends in the next 25 years. It is on the increase. Why I'm showing all of this information, so we can give a perspective when answering some of those questions later on I've been put forward to. And then that's a 30 years graph of the houses and units in countrywide stats, like how much of a percentage property have grown since 1992. So over 32 years. The total value of Australian property market at the moment as we stand is around $7.9 trillion. This is by the end of the January. And that looks like going up in next 6 years to $11.10 trillion. Now, another interesting stats you might want to know as well is like what is the debt level, because when people talk about the property bubble and the value of the properties in Australia very high and that sort of stuff, the total mortgage on these properties is around approximately $2.10 trillion. So 80% of the value it does not have or like 7 point, like which is a bit less than 80, but like 2.1 trillion loan amount against the 7.91 trillion asset. So which is very healthy ratio. So I'll head out to the Q&A now and we'll answer the questions put to us previously. Stop sharing my screen. So any questions in the meantime, please? Or I can start from the questions which were sent to us previously. Okay, looks like I'll start with the question previously. I had a question from Carol on how to buy a property on Super. The best way to buy a property on Super, in my understanding, this is all, we have an accountant here as well, and we have a solicitor here as well, by the way. So if you have any questions, you can ask Wasim from Aman Lawyers or Loveleen from the accounting firm. So they'll be happy to answer your questions as well. Now, the question was like how to buy a property on a Super. If you have $80,000 to $100,000 in Super and you have a job where your Super is coming in ongoing basis, the best idea is like you need to speak to your accountant and then set up the company and bear trust, and then speak to a mortgage broker on how much money you can borrow. And then you're in a position to leverage 80-20, which is like you can borrow 80% of the money with 20% down and buy a house on that. The beauty in that is like your rental income and your continuous Super contribution, they're both paying off the house. So if, for example, you bought a property for, to make it easy, 500,000 or 600,000, and you put in 120,000 down in the deposit, and now the loan is left on is 480,000. So that property, if it's rented out for 500 a week, so 25,000 or 26,000 is the rental income. And if you have it like on 100K or 120K, you got 12,000 coming in for your Super as well. And then that is going into repayment of that loan as well. So instead of paying just the rental, you're paying double 38K per annum to pay off that house quicker. And that property will outperform any Super strategy. I can talk to you from my own personal experience. I've bought a commercial property where we host our Blacktown office, and that property in 4 or 5 years have grown 400,000. And then also rental payment and Super contribution both going in there have brought the loan significantly lower. So that is the question answered on that. Any new questions, guys? Okay, I have a question. What's the option for Australians who are living overseas and would like to invest in Australia? How much down payment banks generally required for overseas buyers? That is something probably Justin, you can answer.
Can you see me?
Yep.
For someone living overseas and buying in Australia, to be honest,
They're Australian resident. They're Australian resident, but living overseas and like to invest in Australia. How much deposit would they need?
so their income is from overseas as well. They're not earning any income, so that they can't be in LMI territory. So 20% deposit minimum. But
My understanding is like it's the expat loans, which is specialized category. I think we have a question from OS. OS, this is specialist category. Different banks provide those sort of products. I believe they have 30 to 40% deposit requirement, and your income is assessed based on, it wouldn't be assessed at 100% level, depending on which country or what sort of treaty Australia has with them for taxation purposes as well. So, and also what's the threshold of income as well. So sometimes they assess it at 80% of the income and they require 30 to 40% of deposit. I hope that helps. But if there's a specific inquiry, we can get the information with your specifics and we can come back to you after speaking to a couple of different banks. Okay, the next question I have, how to use savings until we find or close a property? Very good question. I'm not going to suggest you to invest in cryptocurrency with that or take a risk. You're better off actually putting in the ETFs, electronically trading funds, or index fund. Specific platform, what I use is ComSec. So their returns are higher than the interest you earn from the bank. So they are roughly, depending on what sort of money is being put in, I think they have different rates for different amounts. And but on an average return rate is about 7%. Don't quote me exactly, but that's about it is. And I think it's a good medium to invest the money in whilst you're saving for the house, to buy the house. I hope that helps. If you want me to clarify further, please put the question in again. I have another question. Is it worth buying rental properties interstate? And what are some of the challenges that could come up doing so? I'm interested in buying a rental property because Sydney is overpriced. I thought Perth would be a better option to get into the property investment. So the question is like, should I buy a property interstate, or how does that work? And should I buy a property in Perth? I think I've touched lightly a little bit about the Perth market. It has grown 15%, but in my opinion, what I looked at in the last 20 years data, the fluctuation is way too much, riskier in my point of view. Yes, at the moment, the returns are good and the growth is good, but we don't know what happens with the areas of mining where any changes come in. So yes, you can buy property interstate in any area you look at. But the biggest thing is like, how do you research? What are the demographics? Who's the likely tenant for that type of property? What's happening in the local councils? How sustainable that area is for the economic growth? What is the sort of like type of client you're going to get who's going to live there? Are they blue collar worker? Are they white collar worker? Are they, what sort of family formation is there? They're singles or families or couples with kids. So that sort of information is readily available these days online to look into. And then what's the last 5-10 years growth has been? How's the rental demand as well? Is there any new lot of unit blocks are coming up as well? Then people have a lot of option to for a cheaper rent if you're buying a house there. So that will drop your market in terms of a tenant side of things. So a lot of those things to look at. But I have Charlene here, who's got properties in interstate as well. And Charlene, I'll enable you to talk. I personally don't have properties interstate. All of my properties are in Sydney, in New South Wales as well, specifically in Sydney. But how do you choose the property management side of things? And Charlene can explain you that better. We're just enabling her. These days, I think a lot of the times when we speak to the landlords, even if they're living in Sydney, everything is done through emails, phone calls, and messages. So you don't have to be there. Hopefully, Charlene can. Okay, Charlene?
I'm here. So when you're looking for an asset manager or property manager, a couple of things to look for is their experience, how they handle difficult situations, understanding the supply and demand in the area, and looking to present your property in the best way forward. So if it's presented well and priced right, you would always find higher quality tenants, but you need to make sure that your property manager, even if you are interstate or overseas, that they can act on your behalf in a proactive manner. So asking them the difficult questions when you're going through that selection process. So how would they handle abandoned properties? How would they handle vandalism of properties when it's vacant? The expected returns on the investment, how often you can grow and do rent increases, and what their connection is to reputable trades and businesses in the area would always help you.
I'm going to be a devil's advocate here. What happens in the major structural issues or major faults? And let's say you're in Sydney and properties in Queensland.
So from personal experience, if you have severe storm damage, like they did in Queensland recently, having a property manager that understands the insurance process, how they operate with their trades, and they are good at giving feedback on how to fix the issue. I know I had some tiles come off one of my properties, and my property manager guided me through every step of the way. It does help that I'm in the same industry, but she was one step in front of me. I didn't have to chase her. She was giving me the updates all the time. So finding a person like that, sometimes it does cost a little bit more in terms of their management fees and so forth, but you do pay for what you get long term.
Okay. Does anyone have other property management related questions, please? If not that, any other questions for me or Justin? Understand that you might be having your dinner, but if anything, you can type it in. Okay. We have another question. What is the rental market prediction in 2024? Charlene, you want to answer it?
So for Western Sydney, where we are based,
maybe you can talk.
Yeah. So what I'm finding at the moment is if the property is presented well, we are attracting a lot of tenants, and if it's priced right, it is highly sought after. The properties that are not maintained, not presented well, that are overpriced, they are sitting on the market a little bit longer than the other ones that are well presented and so forth. And based on current supply and demand rates, it is only going to increase the demand for quality properties. For instance, we listed a property yesterday, and we had an application within 2 hours, and we leased it above asking by the tenant's offer by an extra $50 a week. It is a well-presented property in a great location, close to public transport schools had great attributes as well. So that was a great outcome for that property.
I can chip in here as well. Based on my research and looking at the data and the numbers, what I think is like as long as the interest rates stay higher, when I say high, even if they come down, as long as they're above 5.5% and the construction industry does not pick up, and that gap in the dwellings and the people looking to buy or live in or rent is greater and greater, the forecast of rentals is going to be high. You can see the stats in my presentation previously on one of the slides where in the last 10 years they grew in 2023 at the same rate as the property values. So I don't see that slowing down personally, and that is something to do with the number of dwellings available and the higher interest rates. So the landlords are passing those costs on, and also people don't have enough option other than that to pay. So in foreseeable future, maybe at least another 18 to 24 months, it doesn't look like rentals coming down. What is your take, Charlene, on especially in the Western Sydney region, granny flat rental market? That is another question come up.
The granny flat market is growing. Most people start off in granny flats if they're moving out of homes, or people that are downsizing. I'm getting a lot of clients that are building larger granny flats, such as 3 bedrooms now, to cater for that. I'm having a little bit more of a smaller backyard, but looking to have those high quality features in there will attract good tenants. And if you have a property that's close to a train line and great facilities such as schools and shops, I don't see why you would hesitate to put a second dwelling on your property to increase your income and help assist with the outgoings of the property. So I can only see it going upwards from here, in my personal.
I think the average rent now for granny flat has gone above 400.
The average is between 420 up to 550, depending on the location. I also have a granny flat on the market at the moment at 600, and that's a 3 bedroom with a single car garage. So they are definitely increasing, and they're all predominantly the higher rent are achieved closer to the train lines and so forth.
I think when the trend started for building granny flats in early 2010s, please correct me if I'm wrong, Charlene, they were around 200, 180 a week around Western Sydney?
Yeah, at the moment it is 380, but going back 10 or so years ago, they were all sitting around that $200 a week mark, and they weren't really sought after. They thought of it as like in-law accommodation. You can't really afford much more where you are. Whereas now the perspective's changed.
And doubled. Okay, I've got to answer another question. What is the minimum amount I should have saved up to consider buying a property? Basically, how do I know I'm ready? I think I'm going to answer the second part first. You are never going to be ready unless you take a step. I can sort of relate it back to my initial investment. As I mentioned to you guys, like I had 15K, me and my wife, and we just happened to get a 7K government grant, and that was our deposit. And then we just took a plunge, and then interest rates were at 10%, and then we still somehow made it work and then got into the property. I would say minimum amount you should have saved up, depending on the property. Even if you can get like 5 to 10% deposit, you should take a step and buy property. As you can see in a lot of the stats, property values aren't coming down, and Australian property market is a very safe investment based on the trends, based on the new build and everything like that. So you can go in with full confidence. And if, for example, you're buying something for 700 or 800,000 as a first-time buyer, or even we have actually people buying up to $1 million or 1.2 as a first-time buyer as well in the current market. So if you have 5 or 10% deposit, you can get a loan and you can service a loan. Another very important tip, when you use that first buy as an investment, you should budget that it's going to be vacant for 4 to 6 weeks of the year. So you need to have the additional money to cover the mortgage for that time frame, or any unforeseen costs for the repairs as well. The biggest issue, maybe Charlene will face this on a daily basis, the first time investors, they don't budget those costs in. So if the tenant moves out, now they got to pay the entire amount of the repayment. There's no rent coming in, but that should be budgeted to start with when being an investor. So you should have maybe 2 or 3% of the property value sitting in your offset account as well. So I might have confused further, but summarizing it, you never know until you take a step. You should take a step. You are ready as long as you have 5 to 10% deposit of the property you're buying, and then you have a secure job or stable income. And then once you take that step, you make it happen. Any other questions? We've got 3 minutes left. And once again, I want to thank everyone who took part in this today. It gives us a lot of encouragement. So the videos I make, someone's listening. And thank you very much for everyone who attended. I was thinking I'll be talking just by myself here. And then I was prepared for that, actually, no one turning up. But few people here in double digit, that's already a win for me. So someone does care about it or someone does listen. And I just want to thank Wasim from Oman Lawyers and also Loveleen from Accounting Practice, Justin from H2O Loans, who couldn't have Oman here. Would have been good to have him here. Some people would know him already. Any other questions, guys, or should we wrap up? Okay, we'll be sending everyone an email tomorrow with the top 20 suburbs of my pick, and also a link to join Kajabi community. So in there, like, we'll be attending all the time, like the questions being put forward, and we'll be happy to answer those questions at any given point in time as more frequently. And then please share your wins in there as well if you want to be part of it. There's no charge or anything. It's a free community. As I mentioned to start with, we want to make property investing a more sort of in trend. I want to increase that number, and we want to make it like creating wealth a good thing, and to be proud of, and to be, like, to celebrate the success rather than to be frowned upon. So if there's no further questions, we'll just then say goodbye. Have a good night, everyone. And once again, thank you very much for attending.